David here, your certified remote financial planner, using technology to make financial advice available to you on your schedule and wherever you may be. 'Tis the season to give thanks and to give selflessly, but that doesn't mean that we shouldn't use our giving to reduce our tax burden come April 15th. That's why in today's post, I break down my 8 rules for maximizing the tax benefit from your charitable donations. Rule number 1 is the most important because without it, you won't get any financial benefit from your deductions. You have to itemize. When we file our taxes, we have the option of electing a standard deduction, or if it's of greater benefit, we itemize. For 2016, the standard deduction is $6,300 for a single taxpayer and $12,600 for a couple filing jointly. So how do we know if we'll itemize? Most people that itemize fall into one of 2 categories. They're either a homeowner and a resident of a state with income taxes. Mortgage interest payments are an itemized deduction. A single taxpayer with a $200,000 mortgage and an interest rate of 4% will pay $8,000 in interest in a year, which is deductible as an itemized deduction and is more than the $6,300 standard deduction. The other common category is residents in states with income taxes, which is 43 of the 50 states. If you pay thousands of dollars each year in state income taxes, it may be sufficient to exceed the standard deduction bar, and it will be more advantageous to itemize. Home ownership and state residence are just 2 factors. There's many different ways, such as high medical expenses, or even if you just donate thousands of dollars a year. But the key is that if you want a tax benefit from your donations, you have to itemize. So once we know that we're itemizing our deductions, we can move on to the other rules. Number 2 is to ensure that your donation qualifies. For a donation to be tax deductible, it must meet 2 criteria. It must be to a qualified organization. Generally, this means a domestic organization operated exclusively for charitable, religious, educational, scientific, or literary purposes, not individual people. The second criteria is that the donation must be of cash or an item in good condition, meaning it must be fully functionable and usable. Can't be a shirt full of holes or a puzzle missing pieces. Rule number 3 is to be conservative. Don't overestimate the value of your donation. If you receive any goods or services like a pancake dinner in exchange for your donation, you need to reduce the value of your contribution by what you received in exchange. Additionally, when you're donating clothing or household goods to a charity like Goodwill, you generally are responsible for doing the estimate. And it can be hard to value your favorite jacket from Abercrombie & Fitch at $10, but you've got to be conservative. And when in doubt, use a pricing guide. I linked to one in the article. Rule number 4 is to maintain the proper documentation. Different donations require different documentation. Again, it's best to be conservative and maintain any relevant documentation. A general rule, larger the donation, the stricter the requirement for documentation. Check out the post for a lot of details that break it down by donation type and value and the different requirements. Rule number 5 is specific to donating vehicles. The value of your deduction depends on how the charitable organization will be using your vehicle. If you're looking for the greatest deduction, you should take the time to understand the organization and what they plan to do with your car, boat, or plane. Rule number 6 also has to do with vehicles. It's don't forget about charitable miles, tolls, and parking. If you volunteer for a qualified organization, you may be able to take a deduction for the miles you drive to, from, and during your volunteer time, and the tolls and parking expenses incurred. To maximize your tax savings, be sure to take advantage of this deduction as well. Rule number 7 is for regularly charitable individuals or those looking to maximize their tax savings. Donate appreciated stock. You can donate appreciated stock that you've held for more than a year, and you'll avoid paying capital gains tax as well as receive a deduction equal to the fair market value of your donation. It's financially advantageous for you and the charity. The final rule for maximizing the tax benefits of your charitable donations is to recognize that there's a limit. Generally, the tax law only allows a deduction equal to half of your income in a single year. The rules around this can be tricky, so if you're donating a large portion of your income, ensure you know them and have a plan to receive all of the deductions in which you're entitled to. So, happy holidays to all of you out there in YouTube, and be sure to check out the post to learn more. There are a lot of details I couldn't include here, and to make sure you're always up to date with the best financial advice, subscribe to this YouTube channel, my weekly blog, or schedule a free 30-minute one-on-one call with me, your certified remote financial planner, using technology to make financial advice available to you on your schedule and wherever you may be.